So when we talk about a low doc business line of credit, and especially if you want a quick approval, what happens is that you have to strategize. You have to use a specific step by step. And that's what I'm showing you in today's conversation. So in today's conversation, I want to show you 7 proven tips that always get you approved when we talk about low doc business line of credit with quick approval and large amount. Don't you go anywhere. You're going to love today's conversation. I guarantee you. Welcome back, folks, to another edition of the Awesome Sorta Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you ever ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about low documentation business line of credit with quick approval and large amount. Here are 7 proven tips that always get you approved, okay? The first thing is the lenders. We're talking about lenders. You want to seek the right lender, okay? Forget about banks and credit unions. When we talk about low documentation business line of credit with quick approval and large amounts, banks and credit unions don't play a role. They are not going to lend to you because they are very conservative institutions. They are risk averse, okay? Anytime you talk about low documentation, no documentation, you are speaking about risky propositions, risky transactions, okay? So you want to prioritize alternative lenders and online lenders like OnDeck, Bluevine, Balboa Capital, Kalamata, SmartBiz, and Toro Capital. Okay, so it's very important to be very strategic in choosing your lender. So in choosing your lender, I mean, you want to check out their Better Business Bureau rating, and some of them they have a Trustpilot rating. So it's all about doing the due diligence yourself to really be clear about the reputation of the lender. You want to find out how flexible the lender is, especially when it comes to you, when it comes to your business line of credit, okay? Try to do some background research on the company. Watch shows like this one, okay? You want to read some articles on the internet. It's very important. And you want to compare lenders, right? You want to look at things like fees, origination fee, early payment fee, and all that kind of stuff, okay? Because we're talking about a business line of credit. We are speaking about an ongoing credit product, okay? So you tap into the business line of credit, you repay it, and then it replenishes itself. And you want to work with a lender that offers exceptional customer service. It's very important, okay? And you also need to identify the types of loans the lender offers and their requirements, okay? See if you qualify. For example, on the FICO side of things. So this is really important, okay? And so here are some pro tips. Please make sure that you first look at the lenders in your area, okay? And then you can actually go national. But it's always very important to study the requirements of the loan so you don't waste your time and energy chasing the wrong low doc business line of credit. The second hack that always gets you approved is what we call spending patterns. In other words, you need to explain your business's spending patterns. You want to justify the use of credit line proceeds. It's all about explaining to the lender, hey, listen, this is the reason why I'm just getting the business line of credit. You want to elaborate on that. Don't try to hide those things, because the more the lender understands the use of the business line of credit proceeds, the better your chances of actually getting the business line of credit, especially with low documentation, okay? And so if your business regularly requires access to funds to meet short-term capital needs to manage the business day-to-day capital requirements, then you want to apply for a line of credit. It really makes sense. In other words, if there is a chasm, if there is a gap between when you receive money from your customers, we're talking about accounts receivable, and when you pay your vendors, your suppliers, we're speaking about accounts payable. If there is a gap between those two, then you have a liquidity problem, and you can use a business line of credit to actually fill that liquidity problem. Okay, so for example, we have let's say you are a seasonal business that's somewhere in Oregon, and you generate most of your sales in the summer. You could use a line of credit, a business line of credit, in the off season. Okay, provided you have the cash flow to make the periodic payments to help cover overhead as you are bridging from one season to the next. Okay, and the line of credit could allow you to maintain normal business operations even though your income fluctuates. Very important. Okay, let me give you another example. Let's say you are a small business in Teaneck, New Jersey. You can use a line of credit to finance a marketing campaign which would attract new customers and expand sales. Okay, so the borrowed funds could be paid off quickly because the campaign will potentially generate additional revenue. So I'm telling you, you have to explain your spending patterns. Okay, you have to justify the use of the credit line proceeds. And another example, let's say you were somewhere in New Mexico, and if you need to cover expenses while waiting for clients to make payments on an invoice, a line of credit could be useful for cash management, right? So a new business without an established business credit profile, or a business owner with a low personal credit score, will find it difficult to qualify for a line of credit. But if you are able to justify the use of the money, you're good to go. Big decision time, boss. Big decision time. The next time you are trying to apply for a no doc or low doc business line of credit, please think about your spending patterns. You want to document it, and you want to justify the use of line proceeds, credit line proceeds, very clearly. We are talking about number 3. We have legitimacy. Boss, I'm still talking to you. You probably, are you there? Okay. You need to prove that your business is legit. You know, a lot of people walk around, and again, we've said this before. It's important to tell people that you have a legit business. I'm not talking about, oh, I have a name, or I filed for incorporation or registration a few years ago, but the business has been dormant. Nothing has happened. Okay. No, you want to have an active and legit business. And this is important because if you are looking for a low doc business loan, and a business line of credit rather, you want to prove to the lender that you have a legit business. What is a legit business? You got to have your EIN, employer identification number. You need to have business licenses and permits. Okay, everything around the regulatory side of things, you need to have those. Okay, you want to have tax returns at the federal and state levels. I'm talking about your 1065, your 1120S, your 1120. You want to have those. Okay, and if you're a sole proprietorship, you want to have your 1040, and make sure that you feature prominently in your in your business line of credit application. You want to feature prominently your Schedule C. Okay, because that's what the lender is interested in. You want to have your bank statements, okay, and your business bank statements. That's what it is, and it's important because we are trying to lend credibility to your application, right? It's all about lending credence, lending credibility, and putting some prestige on your business line of credit application. And also, don't forget to show your certificate of good standing. Those are important elements that are the fulcrum of a strong business line of credit application. Okay, so we want to show that the business is legit. You want to talk about your accounting system. Do you have proper business accounting systems? Everything that really do you have internal controls? Those are important things. And here is a winner strategy for you. A winner strategy. You want to start with an EIN. You want to have proper name, first name, last name. You want to have your articles of incorporation or organization, depending on the structure of the business. Make sure you have your operating bylaws. This is important also. And the way you want to do this, you want to gather everything, all the important documents in a folder. It can be a physical folder, okay, or it can be an online, it can be an electronic folder. But you have to have those categorized so that when the lender needs them, you can quickly access them and give it to them. Very important. I'm still number 4. We have owner's equity. I'm sharing with you again 7 proven tips. I'm talking about proven tips that we have used time and again over 20 years or 25 years to get clients the low doc business line of credit that they need. They need it for quick approval, a large amount. Large amount, we are speaking about 6 digits. We are speaking about 100K to 250 and so on and so forth. Okay. Now, you need to talk about the owners and their equity in the business. See, what happens here is that when we talk about low doc business line of credit, a lot of folks make the mistake of believing that they don't have to provide anything about the bio. They don't need to provide anything about the owners of the business. No. You got it wrong, Jose. No way, Jose. If you believe that you are going to get away with that, that's just one rain thing. But the thing is, when we talk about the owner's equity, it basically from an accounting side, owner's equity is essentially your assets, your business's assets minus your business's liabilities. Okay, this is really the owner's commitment to the business. I'm talking about a monetary perspective here. Okay, that's the money that owners have put in the business. So the term owner's equity is typically used for sole proprietorship and partnerships and other companies whereby you have a lower number of equity holders, a lower number of owners, right? If you have a larger company, people talk about stockholders equity, okay? But this is minor accounting differentiation. But what is included in owner's equity? You have money invested by the owner of the business plus profits of the business since its inception. That's called retained earnings in accounting, okay? Minus money taken out of the business by the owner, minus money owed to others, okay? So if the business, for example, if your business is structured as a corporation, equity may also include accounts like retained earnings, I've said that before, common stock, preferred stock, treasury stock, and additional paid-in capital. I'm not going to go into details here. This is more like advanced accounting, but yeah. And so owner's equity is not an asset. Okay. Now, you as a business owner, you might think of owner's equity as an asset, but it's not shown as an asset on the balance sheet of the company. Why? Because technically, owner's equity is an asset of the business owner, not the business itself. So these are things that you need to think about. Business assets are items of value owned by the company. Owner's equity is more like a liability to the business because it represents the owner's claims to what would be left over if the business sold all of its assets and paid off its debts. Now I want to talk to you, boss, about cash flows. And this is really important because I want you to picture this. You are asking for a low documentation business line of credit with quick approval and large amount, right? You want to get the cash without providing a lot of documentation. This is cool, but you got to show that the business generates enough cash to repay the line of credit. This is important because why am I giving you some cash and if I have to chase your cheap ass later on and just asking you to repay me? Think about it. You know, I just gave you the money. Now I have to actually chase you, hire like some agencies, some collection agencies to just get my cash. That's a lot of resources I'm wasting. So I want to make sure right off the bat that you have the resources. You could generate enough money to repay the line of credit. That's all it is. And when we talk about cash flows, okay, boss, I want you to think about two things. When I talk about cash flows, I want you to think about cash inflows and cash outflows. Okay, it goes both ways, money in, money out. So I want you to picture this movement here, this monetary movement, money in, money out. And at the end of the day, what's left in the balance? What is, do you have a positive cash flow balance or a negative cash flow balance? And the thing is, there's an accounting report that actually epitomizes all of these things. It's called the statement of cash flows. Okay, it's actually a statement that actually has 3 categories of cash flows. We are speaking about cash flow from operating activities, cash flow from investing activities, and cash flows from financing activities. Okay, those are things you have to pay attention to. And so the bottom line, so when you add all the three balances on those cash flow categories, you get your current cash flow position. It's really important to also explain to the lender the major contributors to your cash flow. What are the products and services that generate the most revenue, the most cash? It's important, okay? So money, 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 money. Boss, how are you going to prove to the lender that you generate enough cash flow to repay the line of credit? Think about that, okay? What are the products you're going to put forward? What are the strategies you're going to have to make sure that you are repaying the line of credit that you just got with low documentation? If you can do a good job at explaining that, what's going to happen is you are 90% closer to getting your large low doc business line of credit with quick approval. I'll be right back right after this. Don't go anywhere.
Finest, young as tequila, and call me señorita. I papi got me dreaming, my legs up on the ceiling. Oh yeah. I know when he come, he ain't never gonna leave. No. Hit it the night run, and that's the way I wanna be. So don't think I'm the one to won't ever be enough.
Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation about low documentation business line of credit for quick approval and large amounts. I want to talk to you now about collateral, which is the number 6, and you need to substantiate the collateral you may pledge if needed. See, the thing is that when we speak about low doc business line of credit, you have a secured business line of credit or unsecured business line of credit. So basically, if the lender wants to have some collateral, if they want you to have skin in the game, as they say, if they want you to make sure that you are committed to the transaction also, then you need to have the right collateral. So collateral is an asset that has value. But not all assets can function as collateral, and some forms of collateral are favored over others. It depends on your lender, okay? The best collateral from the lender's viewpoint is an asset that it can liquidate quickly, meaning the asset can be easily converted into cash, okay? So therefore, cash is favorable as collateral. Securities can also serve as collateral. I'm talking about treasury bonds, stocks, certificates of deposit, the CDs that we talk about, and corporate bonds. They all can be used to secure your business line of credit, okay? Now, property that can be used for a business line of credit or loan, collateral includes real estate, equipment, inventory, and vehicles, okay? Think about that, because those are all tangible, hard assets that can be owned by the business or the business owner, or have loans against them, okay? Now, the thing we have seen in our research is that hard assets may require more work to liquidate, and their value is less certain, okay? In some cases, you will need to get an appraisal of your hard assets to verify its value. It's important. And future earnings are another class of collateral, including accounts receivable, which is invoices that you have sent out. Okay, so some low doc business line of credits require to pledge personal loan, such as your home or car. Be aware of that in addition to business assets, okay? So how much collateral do lenders need? Well, it really depends on the transaction, okay? And this is what we call in the industry loan to value. So loan to value ratio is a key metric that your lender might use to decide the collateral they need, okay? So LTV is the amount a lender will loan you based on the value of the collateral, okay? So how much collateral you require to pledge depends on the 5 C's. We're talking about credit history, capacity for repayment, capital, collateral, and conditions. That's what we call the 5 C's in the industry, okay? And look out for liens, okay? Also, because a lien allows lenders to take a defaulted borrower to court. So liens can either be generalized or the one that focus specifically on the collateral, okay? And so those are known as blanket liens. In other words, they collateralize all assets of the business. Okay, so think about that. And blanket liens are really preferred by lenders because multiple assets can be used to satisfy the loan, and these liens might result in better loan terms and rates. Last but not the least, boss, I want to talk to you about business plan. So if you're trying to actually get a low documentation business line of credit, one thing that you might want to put forward to actually increase your chances of approval is a business plan. You want to write a compelling business plan today. And I'm not asking you personally to write the plan. You can outsource the work to someone, okay? If you have no talent or no capacity, or no time for that matter, to write a compelling, a captivating business plan. You want to outsource the work to somebody else, okay? And you can find freelancers locally in your area. Just look for a business plan writer, or you can find freelancers online, okay? You can go to websites such as TopTal. We are speaking about Fiverr. We are speaking about freelancer.com, and we are speaking about Upwork. Those are the four major sources of business plan writers, and expect to spend about $150 to $200. Okay, and so when you are putting together a business plan, you need to divide the plan into this basic section, which every quality business plan should have. So you want to talk about the founder's bio. It's important for the lender to know who is behind the business, right? Founder's bio, including their expertise, their risks, the companies they have had before, or the companies they currently have. Okay, talk a little bit about the founders. It's important. You need to talk about the executive summary also. Okay, this section is a very brief overview of what your business plan is all about. Okay, make sure that you make it very captivating, because this part rather, should entice the reader to read more, to see more, to want to see more. Okay, and then you provide a company overview. Okay, and this is basically a description, if you will, of what your business wants to do, the business in which it will compete, your vision and mission, the main product services that you will offer, and the principal actors who will be involved. Talk about the business environment also, okay? Talk about current trends in the market and the competition you will face there. And you also can talk about the company description. Here you present your strengths and weaknesses using what we call a SWOT analysis chart, okay? SWOT analysis stands for strengths, weaknesses, opportunities, and threats. And talk a little bit about the company strategy, okay? You want to have a financial review of the company. You provide financial statements, including a profit and loss, balance sheets, cash flow statements, and stockholders' equity, okay, statements. And at the end of the day, you want to talk about an action plan also, where you provide a time-phased roadmap for going forward, right? Because you need to have a plan. You need to have a GPS to achieve the goals and objectives your business plan seeks to achieve. Thank you so much, boss, for your attention. I really appreciate it. I was talking to you today about the low documentation business line of credit with quick approval, a large amount, 7 proven tips that always get you approved. Number 1, we have lenders. Number 2, spending patterns. Number 3, we have here legitimacy. Number 4, we have owner's equity. Number 5, we have cash flows. Number 6, we have collateral. And number 7, we have business plan. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous, stay blessed.